one of the things that we've learned over the 30 years we've been investing in venture is that, as conventional wisdom always says, you should be buying low and selling high. It's hard to actually do that. So when the markets are down is often the best time to be investing in companies. And that was true for us in 2008, 9, 10, 11. I think it will be true for us now. But we are more selective to some extent about the things that we invest in. So we hope that our investment rate wouldn't be going down and, in fact, may even be going up. But it may take a bit longer for us to get things across the line, especially in situations where we can't travel to go see companies. I think for the market in general, one of the things that we found, both for ourselves and I think for the market generally at the early stage, was that CEOs and founders acted pretty quickly to try and either make cuts or move to furlough or find ways to stay alive. The furlough situation was ideal for a lot of our companies because it allowed flexibility in decision making. And I think one of the advantages for European startups is that by definition over time, they have had less funding than, say, our US counterparts. And so by definition, they're going to be more capital efficient, which means we might be able to cut our way into profitability and self-sustaining. So I think there are some advantages to European venture capital right now.
And what's funding availability like? I mean, we came into this with everybody telling us, oh, there's loads of dry powder around. People are just desperate to find new ideas and have startups come to them. But very quickly, I think as Warren Buffett says, as the tide goes out, you find out who's swimming without trunks. Are you finding that that money is being taken off the table as people have other funding needs?
Not really. So I think deals that had term sheets extended, for the most part, are being honored. And then the dry powder that was there 3 or 4 or 5 months ago is still there. It takes longer than that for the raising cycles to start showing less and less funding, but the dry powder is still there. And one of the things that we are seeing is that there's actually more competition for the top tier businesses. So we've actually been involved in a couple of processes where valuations have been going up because there's more competition for the most sought after businesses. I think the fallout is likely to be that for the businesses that weren't as strong or the businesses that were kind of marginal calls in terms of investment, they're probably not going to be able to attract funding.